Joining us now, Victoria Greene, CIO at G Squared Private Wealth and a CNBC contributor as well. So why, Victoria, this dig? What makes gold or international so attractive right now?
I think it's unequivocally risk off right now. So you're looking for somewhere to hide a little bit, which I think dividends are attractive. Value stocks hadn't moved up. They weren't as expensive. You're looking to hide somewhere. You want to play defense right now. Get your health, your staples, your utilities that are not power focused, not AI focused, and find yourself some quality companies, sit around, clip your coupon a little bit, and let this all play out in front of you. Unequivocally, international is running, and it's something you might want to have a little bit more of a foothold in this year than you had last year. And then gold has just been a great hedge, and I think uncertainty is going to continue to rise as we play this chicken game of will we, won't we tariffs. So I look at those three sectors, and I'm kind of like Shaft right now. Can you dig it? Absolutely.
Well, okay, fair enough. I can dig it, and what I'm digging is this. I'm maybe not, I don't want to say dig like I agree, but I get what you're putting down, which is this. When I hear a guest come on and say, wow, you should go to dividends, maybe some international, and particularly gold, Victoria, to me, it kind of signals a little nervousness.
Absolutely. It's testing our mettle right now. And I'm not saying you give up. I'm not saying you sell out. But I'm saying, look, we're testing the 200-day moving average. There's huge supports here. There's a lot of question if the Trump put does or does not exist. Is he going to let markets fall below pre-election levels? We're flirting with that right now. It's 57.12 was the day before the election. You've got the 57.30 200-day moving average. We can breach below it. We did that in the fall of 2023. But right now there's risk off in the technology AI sector. I don't think AI is dead. I do think it could continue to consolidate and see near-term pressure. So yeah, I want to hide in a little bit of quality right now. I think risk off. We're down 7% from our highs a little bit. Could accelerate a little bit further. So add these sections to your portfolio. Other than 7 stocks.
You were getting ready. I don't know if you heard the gang on halftime, but there was a really interesting. There's always interesting points made at halftime, but they made a point that the trade. I think it was Josh Brown who made the point that the trade from last year, 2003, was kind of over. Like, you know, just things go down. Guess what? Yeah, screw it. I'm going to buy the Mag 7 or buy NVIDIA, and it'll go up. That's probably over. Would you agree?
I don't think it's dead. I'm not hurrying to play capital because I think you could have a little bit further to go. I think if you back that QQQ chart out, you back that NVIDIA chart out, and you say, look, long-term buying has been successful for 10, 20 years. If you're calling AI is dead, then you're calling this exceptionalism U.S. bubble is dead. And I don't think we're there yet. I think you could actually see this volatility persist and a little bit more near-term pressure. But your long-term supports to me are still intact. So I'm not throwing in the towel on technology. And we'll see. I mean, Broadcom's after close today. And then you also have Costco reporting. Both of those are huge names on consumer sentiment and what's happening with AI and chips. But again, today's pressure on AI, Marvel wasn't a bad result, right? That was some of the huge thing causing the sell-off today. They beat on expectations and their guidance was in line. It's not like they missed. It's just right now, I think you're seeing this sentiment risk off, which when it's like this, I say, yeah, it's buyable. It's not that the fundamentals have deteriorated in these companies. You just aren't seeing these blowout earnings reports because expectations are so much higher.